Ethereum is just about the only other coin that has ever managed to scratch the surface of Bitcoin's dominance. Every other crypto after that is pretty much either a Bitcoin killer or an Ethereum killer. Beating Ethereum hasn't been a walk in the park, and the only other cryptocurrency to come close is Binance Smartchain's BNB. But what if I show you a coin that has the potential to one day rival Ethereum? In this video, we'll look at Harmony 1. What type of protocol is Harmony 1? Is it a good idea to invest in Harmony's native token? These are a few questions we'll be shining a light on in this video. What is Harmony 1? We choose to call Harmony 1 an Ethereum competitor for the fact that Bitcoin is way out of reach of everyone else. Project Harmony was conceived by three bright minds, Steve Say, Rogan Lan, and Sahil Devin, who all shared a love for unraveling the mysteries of the crypto market and blockchain protocols. Harmony launched in 2018 courtesy of a US-based software company called Harmony Protocol. But the cryptocurrency itself is managed by the non-profit Harmony Foundation, which might comprise its community. In the preliminary rounds of the launch, the project raised $28 million between 2018 and 2019. The mainnet of the Harmony Protocol was launched in 2018, and as far as we know, there's never been a security challenge, nor has there been a downtime in its service offerings. In terms of structure, Harmony 1 shares many similarities with Ethereum 2.0 when it just launched. It wasn't until recently that Ethereum migrated to its ETH 2.0 proof of stake consensus. Harmony 1 was POS based long before now. Harmony 1 was primarily built on the Ethereum network, so it makes sense to share some of the POS features of the network. Ethereum's POS consensus has three layers. First, the coordination layer, called the beacon chain. Second is the shard chain, known as the data layer, where the block information is labeled, organized, and distributed. The third layer is the execution layer, where the blocks are first broken down into shards using the Ethereum virtual machines. Harmony 1 shares the following similarities with Ethereum. 1. It has a proof of stake consensus based on a secure and flexible sharding scheme. 2. Validators are chosen randomly. 3. Whoever comes out as the first validator gets to validate 40 blocks as the leader. However, the Harmony 1 protocol differs because it offers a more efficient algorithm for generating randomness in the system. The protocol combines the verified random function, VRF, and the verifiable delay function, VDF. What does VRF do? It helps to generate unbiased, unpredictable, easy to rectify, and readily available solutions. It makes computation easy and efficient for network validators. The cryptographic design introduced in the VRF uses a private key to process any message. It produces a distinctive, random output along with proof. Anyone who knows the public key and the evidence can confirm the legitimacy of the random output. What VDF does is simple. To protect against the last revealer attack, absolute randomness is not revealed until the VDF has been applied. The final leader cannot skew the randomness by deciding whether or not to submit the last random number. Hence, the VDF is employed to postpone the revelation. The final leader won't be able to determine the precise final randomness before the random selection of validators is committed to the blockchain because of the VDF. So, the key difference between the two chains is in the system's randomness. We'll explain this further in the following context. Harmony relies on Ethereum's virtual machines to propagate its smart contracts, and like Ethereum, it can only process a low amount of transactions per second. The protocol is split into 4 shards, which can process 250 transactions per second, meaning they can run about 2,000 transactions in a second with a transaction finality within 2 seconds. The randomness ensures that the shards are incorruptible by just any validator who has a large stake in a liquidity pool. This is the common practice in most proof-of-stake protocols, and all they have to figure out is how to choose a leader in the blockchain validation process. Harmony 1 chooses to call its own unique version of the POS the EPOS, or effective proof of stake. The consensus reduces staking rewards for validators as their stake becomes too large. To participate in the project's mechanism, you can either be a validator or a delegator. As a validator, you must stake a minimum of 10,000 coins to be a part of the node system. Delegators don't have such a steep price to pay, as they must stake at least 1,000 coins. The reward for staking is 10% per year for validators, as 1% less for delegators. When you choose to unlock your stake, you have to wait for a date to receive your coins back in your wallet. So you can either be a validator or delegator. If there's misconduct, the entire stake is slashed as a penalty for both delegators and validators. This is all made possible by user interaction with Harmony's One Token. It facilitates the cash flow of the entire ecosystem. With all its interfaces, Harmony One is a cool blockchain-based platform that offers all the tool developers needing to create, host, manage, and use decentralized apps or DApps. These DApps can be used to solve problems or interoperability and scalability of crypto transactions. Since it was hosted on Ethereum, it might be the network's best bet to overcome its concurrent issues. Harmony One is part of the rare crop of cryptocurrencies with stable tokenomics. It's not a deflationary token whose total supply fluctuates periodically due to unplanned burning mechanisms, influencing its price action. The only way in which the coin deflates is in the burning of transaction fees. Instead of the transaction fees getting returned into the circulating supply, they're burned. It's a meaningful policy given the immense utility of the token, which are 1. Paying for transaction fees. Every swap in a trade already attracts a certain transaction fee that's charged in one token. It can also be used to make purchases with merchants that accept cryptocurrencies in exchange for goods and services. 2. You can stake one token to earn rewards. The blockchain is a POS consensus and is secured by stake tokens. You need one token to participate in staking activities. You must hold many tokens to be chosen as a validator. You can also lend your tokens to other validators as a delegator. You'll earn some compensation in Harmony One tokens for the service rendered to protect the network. Number 3. Take part in governance. Decentralized crypto projects are governed by dedicated investors in the community. When you hold some of the tokens, you make protocol-level decisions and suggestions on how the project can be improved for others to vote on. The total number of rewards from investors who stake in the project all year long is a fixed 441 million One tokens. Harmony price prediction. The One token has had to endure the rigor of the bearish market and is far from its all-time high value of 38 cents. At the time of recording, the coin is trading at 0.018 cents. This is a really good buy entry for low-value tokens with great potential, and Harmony One is one of the best options out there, and we dare say it can make you rich one day. If you have $100 to spare at the moment to buy Harmony One tokens right now, you'll be able to get approximately 5,600 One tokens. As it is our custom on this channel, we do not recommend that you approach any token with the mind of making quick profits. That's the number one way to get scammed or lose your capital to the volatile crypto market. So we're emphasizing the same here. Harmony One tokens will yield great profits in the future and might require a bit of waiting. You can have a target to see each token worth $1. So holding 5,600 tokens, you'd be $5,600 richer. If you had more, you could do the math. Crypto enthusiasts all agree that the idea of Harmony One token reaching $1 in 2022 is virtually impossible, considering the current market dynamics. For some experts, 0.05 seems a little far-fetched as interest has cooled in the general crypto market. Besides, Harmony One is still a pretty new token to most crypto enthusiasts. It's not bad. It just means that Harmony One has more room to expand as it increases in adoption rate and buyers' interest. Early investors in the coin can catch a big break when the market goes bullish once more. In 2023, we'll likely see the token test the resistance at former highs, especially between the 6 cents to 10 cents price range. It's a modest expectation to say the least. 2022 could end on a higher note, with the price settling at 0.02 or between 0.025 and 0.03 per token. However, we can't expect more of the token again this year. This is all we have for you in this video. What are your views on the Harmony One token? Can it do 100 times in the event of a massive market recovery? Drop a comment below. Don't forget to subscribe to the channel, and I'll see you in the next one.